In this video, I discuss the concept of volume in trading and how this indicator can provide important clues when making buying or selling decisions. And although volume should be considered as a purely technical indicator, also for fundamental investors it is one of the few technical elements which are really worth taking into account and paying some attention to. My name is Christoph, welcome to ChartMill. So first of all, what exactly is volume? The volume on a chart represents the total number of shares that were traded during a certain period. That period depends on the time frame the chart is set to. For example, on a daily time frame, one volume bar represents a full trading day, while the same volume bar on an intraday hourly chart will only show the volume of 1 hour. The presence of sufficient trading volume in a stock is important to ensure sufficient liquidity. After all, a large trading volume ensures that you can easily buy and sell the shares and that the spread between the buy and sell price is small, which ensures that the volatility remains manageable. Too small a volume will cause you to see charts like this one. What is volume used for? Volume is a technical indicator. Looking at past volume patterns gives us information about the strength with which specific price increases or decreases have occurred. This can be on individual stocks, but also, for example, on index ETFs that reflect the market situation as a whole. The strength of volume is mainly used to estimate the value of specific price movements. How is volume used? The way volume is interpreted depends on the market situation. It can be used both as a confirmation signal of an existing recent trend, but likewise volume can serve as an early warning signal that the existing trend is losing momentum and a trend reversal is imminent. In this case, it is more of a reversal signal. In this section, we will examine the different options and how volume plays an important role in each of them. A rising trend must be supported by sufficient volume. After all, without sufficient buyers, it will be impossible to push the price up further. In a long-term rising trend, you want to see sufficient buying volume when the price rises, and the volume must be noticeably lower in case there are temporary minor price setbacks due to some of the buyers securing profits. In a downward main trend, the situation is just the opposite. The seller's volume should be significantly when the price is falling, and the buying volume should be noticeably lower in case of an interim price recovery, by traders covering their short positions, for example. Volume plays a very important role when trading breakouts. An upward breakout above a previous resistance level should be supported by a strongly rising volume, which is a proof that the stock is being picked up by significantly more buyers. Even better is when the breakout is preceded by a strong rising volume. After all, this means that the stock is being bought just because it is assumed that the breakout movement will effectively occur. A breakout or breakdown without clearly rising volume increases the chance that you are facing a false breakout. Trading breakouts and breakdowns without volume confirmation is the biggest mistake made mainly by investors with little or no experience. Rising volume during breakouts must be interpreted in comparison with the previous days, but also with the average volume over a certain period. In ChartMill, you can add average volume as a separate indicator. In this chart, for example, I have defined the average volume over a period of 20 trading days. Price retracements are opposing movements in an existing main trend. And price movements are never linear, even in very clear trends. Therefore, an ascending trend will always be a sequence of higher tops and higher bottoms. However, no one can predict whether a price drop in a rising trend is just a temporary price retracement or perhaps the beginning of a real trend change. Keeping a close eye on volume during that price decline allows us to put that price movement into perspective. If the volume remains low during the decline, it is more likely that it is only an interim decline, especially if the price decline is fairly calm with moderate movements. If a significantly higher selling volume is observed compared to the prior buying volume, then there is likely more to it. Often you will also notice that the price is moving in a much more volatile way. In that case, it's time to cash in on the profits or to secure a part of it with a stop loss. The same pattern can be observed in falling markets with intermediate price pullbacks. After a significant rise, in many cases a period follows in which prices tend to move sideways within a limited range. If this is accompanied by relatively high volume, it signals that distribution is taking place and large numbers of shares change hands. This may be as a result of large institutional parties getting rid of their pieces. Partial selling ensures that the market is not flooded with sell orders which would cause the price to fall too quickly. Just to avoid that, large blocks of sales are gradually distributed over time. Distribution only works well if there are still enough buyers who see the sideways movement as an ideal moment to enter the market or to expand existing positions. However, distribution can be an early warning signal that the long-term trend has ended. After all, one can ask why large parties are liquidating their positions. Rising volume at the start and sufficiently high volume during a rising trend are necessary elements if the trend is to continue. However, you should be careful if there are sudden new volume spikes after strong upward price movements. A new sudden volume spike during a strong price movement can be a typical fear of missing out movement caused by traders who missed the surge and now want to jump on board because they fear they will miss the further big upward movement. The problem, however, is that all those who have been in positions for quite some time may use this strong upward momentum to partially liquidate positions and secure profits. So stay vigilant and keep in mind that such volume spikes cause price extremes in which there is a significant chance of a recovery movement, the so-called regression to the mean. The same phenomenon occurs in a strong downward trend. In this case, shorters are speculating on a further downward movement after the price has already fallen sharply. When at the same time the earlier shorters close their positions and secure their accumulated profits, you are faced with a typical short squeeze movement. There are several technical indicators which are derived from volume, and while all of these indicators are merely a delayed representation of what the volume is showing on the chart, they can still be interesting to visually represent what volume is telling us. I will briefly discuss two indicators that are available in the platform. The on-balance volume indicator is a momentum indicator that compares changes in price with the evolution of volume, and this is useful for detecting divergences between volume and price. While the price sets a new top, we fail to see this in the progression of the OBV indicator. Higher tops in price, lower tops in the indicator, a sign of declining momentum and perhaps the harbinger of a further price decline. The money flow index indicator is also a momentum indicator that uses price and volume to identify overbought and oversold levels that can be used to assess price retracements in an existing trend and to spot divergences between price and volume. More information about the unbalance volume and money flow index indicator is available in our documentation center. Links are available in the description below. As with all other indicators, volume itself and other related volume indicators should never be used in a vacuum. While volume provides interesting information about price movement, it does not tell us everything. Typical volume trends can give very valuable information when looking at support and resistance levels, whether or not in combination with classic chart patterns. Also, the combination of volume and specific candlestick patterns can help in identifying trading setups that have a higher chance of success or in detecting reversal signals at an early stage so that accumulated profits are not completely lost. The basic volume filter in ChartMill is set via the General tab in the stock screener. This allows you to define what the minimum volume should be for the stock you're looking for. The precise minimum average volume setting depends on the market. For the US, I usually use 300 to 500,000 as a lower limit, while for Europe it is more in the range of 100 to 300,000. However, the most interesting filter in the screener is located on the Indicators tab where, via the Volume Increase option, you have a lot of possibilities to search for stocks whose volume has increased or decreased substantially compared to the previous trading day or compared to the average volume. This filter is ideal for finding breakout setups associated with strongly increased volume. For example, this filter will look for stocks that break out above their 10-day high and where the volume is more than double the previous day's volume. The video link that appears in the upper right corner provides more in-depth information on a specific breakout screen that uses the specific volume filter. So volume is a very versatile but still too often underestimated indicator. It is the indicator which is closest to the price, which makes the information far more accurate and reliable than for any other indicator. Strong trading volume ensures that there is sufficient liquidity so that stocks can be easily bought or sold. Volume indicates the force with which a movement is occurring. You can use it to visualize the strength of a trend or better estimate the chances of success of typical breakout or retracement strategies. Volume indicators such as the unbalanced volume indicator and the money flow index indicator combine price and volume and display their information as momentum indicators. They are primarily used to identify divergences between price and volume. So this brings us to the end of this video. By now I hope you realize the importance of volume analysis and how it can contribute to the quality of your stock research. The extensive volume filters in ChartMill can certainly help you with this. If you found this video useful, please give it a like and consider subscribing so you will be automatically notified of new videos. Thanks for watching. Trade safe.